Have you ever wondered how banks keep lending money for homes? It often involves a process called securitization. These are known as mortgage-backed securities, or MBS for short. They play a massive role in the global housing market. Trillions of dollars worth of these securities exist, providing the liquidity that makes standard 30-year home loans possible. Banks bundle thousands of home loans into one package. Investors then buy these packages and earn interest as homeowners pay their mortgages. Unlike a standard bond from a company, an MBS is backed by the actual payments from thousands of individual mortgage holders. Investors receive a mix of interest and principal as homeowners pay down their debt over time. By turning illiquid home loans into tradable assets, banks free up cash to issue even more mortgages to new buyers. Understanding these instruments helps clarify how real estate and credit markets interact. Thanks for watching and keep learning.